Well, happy Wednesday to you. I'm Marlon Bowling, and we are going to take a look at what to expect in our ag commodity trade. For a little heads up from Rich Nelson of Allendale, Incorporated in McHenry, Illinois. Well, we're getting 3 days deep into April here, Rich. I know farmers are chomping at the bit to get out there in the fields. How many are having success at that right now?
And that's going to be a very good question, especially as this forecast and the extended two-week outlook has changed a little bit from above normal temperatures to now below normal temperatures, and they're still keeping this extra moisture in the forecast as well. So maybe some problems still in front of us here these next couple weeks.
Okay, so why do we not have the corn market showing bigger gains? Let's take a look at what it did overnight. Everything was a little bit firmer overnight in the Globex trade, but the corn market gained 2.5 cents. It's at 364. If we look at the recent chart on the corn, you know, we had that colossal drop after that USDA set of reports here a while back, and, you know, we're still trying to regain what we had lost at that time. What do we do here? Where does that put us technically in the corn?
You know, I think at the grand scheme of things, we're still going to stay at this low price here, at least into Tuesday's USDA report, where they will recognize these numbers on the annual balance sheets that are updated then. We certainly do expect some higher trade in the coming weeks on this whole planting issue, which is a valid concern. But for right now, and based on other heavy moisture years just like this, we don't usually get a rally going until the end of this month here. So maybe a little too early yet.
How about soybeans?
Soybeans, same type of story. In fact, often those don't get going until maybe in the May time frame in these very heavy moisture pre-plant issues. So I think on this one, certainly this overall new crop issue is a growing concern, but the market's viewpoint, they have to deal with this old crop problem here next week here.
Did I hear correctly? If this would turn out to be a wetter than normal April, that would be like 10 months in a row in the Midwest?
It certainly would be. And, you know, there's only 8 other years with a collected roughly 10-month moisture situation just like this since 1970. So we're in a very select group right now.
What does that do for a typical chart pattern on a year like that?
You know, we often get a rally here, a minimum, a couple of years, which did improve with some dry conditions in spring. We only had an 8% gain, but in most of these other years, we do have a good gain, roughly about a 30% rebound in these type of years. What's really interesting is this is not just a moisture issue for planting. Oftentimes, this also affects yields as well. That's
what I wondered. What does the yield typically do in a year like that when you have a very wet spring?
You know, in these 8 select years where we've been looking at these past few weeks, 5 of those 8 did have a yield which ran below trend. In fact, 4 of them had a pretty serious yield issue versus trend, anywhere from a 5% to a 25% cut versus trend.
Really? Wow. Does that hold true on wheat too?
And as far as wheat, that's also a big question here for us. The problem we have right now is this extreme problem as it stands right now, not yet hitting the winter wheat side. Obviously, on the spring wheat, we do have some concerns there.
Chicago wheat was 3 to 4 higher overnight. Kansas City wheat up about a penny. Minneapolis wheat right now shows the last trade about 2 to 3 cents higher across the board. We'll come back in a moment and we'll analyze our livestock trade for a Wednesday when we come back right after this. We are in the middle of a very interesting discussion with Rich Nelson of Allendale Incorporated in McHenry, Illinois. We're talking about what to expect in the ag markets here today on a Wednesday. And when you look at what's going on in the cattle and the hog markets, well, of course, we have had limit up trade already this week in the hogs. Cattle market is a little more subdued, I guess you would say. And I'm hearing rumblings that the cash cattle trade out in the plains could be significantly maybe lower priced than what we've had the last couple of weeks. What do you hear?
Exactly right. We did have some reports of some 124 trading here yesterday, which would be down $2 from last week and a total of $4 from the previous peak from 2 weeks ago of 128. So definitely some falling prices there.
Okay, when you look at the overall picture here, now we talked about the the chart patterns on the grains and everything. For a long time, we had the live cattle market just kept climbing and climbing and climbing and making new contract highs as it went. It finally backed off of that here, what's it been, about a month ago or so. Is there any chance that they may revisit those levels anytime soon?
In our opinion, probably not here. One thing which is a good piece of news here is the fact that oftentimes these summer contracts do overestimate the coming downside in prices for summer. So oftentimes the summer futures actually bottom in April and have some stable, if not slightly higher trade after that. So we'll see if that happens this time around.
Okay, if I understand correctly, we had ADP jobs numbers out this morning. Is that correct?
Exactly right.
Okay.
They found 129,000 jobs added in the previous month. That did miss the trade estimates of 170,000 for that report.
So what does that mean for the financial markets, the equity markets, and maybe spillover relation to the meat markets here today?
And that's a great question. As it stands, oftentimes that does give us a little pressure, and we are trading a little bit lower today on the U.S. dollar. I see as far as today's cattle futures, maybe just a little bit lower. Keep in mind, we did actually have a relatively good trade yesterday in the face of that lower cash cattle action.
Okay, now we get to the hogs, and of course that has been a wild ride here, and they went from contract lows to contract highs in just like 2 weeks' time. Then they sold off of that. It appeared to have the semblance of a lot of profit taking hitting the market. And then all of a sudden, somebody lit the fuse on that thing and it went limit up again. What do you make of that market action in the hogs? There is so much dynamically at work here in this hog trade.
There is. In fact, there's two things that are kind of new in these past couple of days. Some renewed concerns about African swine fever. They found an infectious form in some food that was tested back in January for Japan. Also overnight, we have confirmation that Cambodia now has its first finding of African swine fever. So that's a bullish story. On top of this seasonal decline in hog supplies, which always happens going from March to summer, this has now started to happen. We do have word that Smithfield has 2 plants down on Friday due to the hog supply issue here.
Interesting stuff. Thanks for spelling that all out. Great conversation. I appreciate it, Rich Nelson of Allendale Incorporated in McHenry, Illinois.